what happened to the earnings of the companies? Company should earn, right? Then only the company can grow. Only when the company grows, automatically the stock market also grows. Hi, hello, this is Ganesh and your millionaire coach and author of the book Money Leaks. And today's video is all about how the company earnings had performed in the last couple of years and how why the market is highly valued right now, depending upon the single most important factor. And in the last few years, the earnings had stayed flat, almost flat, and in the last 5 6 years. And what is earnings? Earnings is nothing but you are paying your money and you are buying a share, and a company needs to grow. So earnings per share, this is the most important factor. Each share, if it is earning 10 rupees, it needs to grow. We understand that there will be fluctuations. On the whole, in the last 5 years and 6 years, if the company is consistently growing by 5% or 10%, it means that company is growing. And Nifty or Sensex, we will compare the earnings per share of Nifty and Sensex. If the earnings of the earnings of the Nifty is growing, it means that all the companies Nifty is consistently growing. Is it easy to understand? Which means that every company, Nifty 50 has 50 companies. Let's take the example of Nifty. Nifty has 50 companies, and all these are top 50 companies in India. If top 50 companies are performing, which means that automatically the earnings are also performing, it's growing. If the earnings are growing, automatically the stock price will also justify the growth rate. If the earnings are not growing, if the stock price is consistently increasing, it means that something is wrong with the company growth and something is high, the stock market is highly valued. And how we can find that? Price to earning ratio. If P is very high, P is nothing but P ratio, the commonly said valuation, price to earnings ratio, we can easily identify. Just go and google it, Nifty PE 50. I'll show in a few moments. And if you look at that value, it's already touching 35. If the Sensex is, if the Nifty P is above 23, 22, 23 itself, it's highly valued. Now it's more than valued by more than 10 points, which means again the valuation is very high. And what happened to the earnings per share? Price is at the top and earnings per share is at the bottom. Earnings per for EPS for Nifty is at the bottom. And earnings is consistently the same factor for the last 5 years. In spite of the same prices, the price earning ratio, the stock price, the Nifty value is keep on growing. So is it justifiable? If you ask me, it's not justifiable. Let me share you the thing. All right. So let's look at this value. Okay. Now just look at the value. It's here from 2004. And if you look at 2003, I hope the data is very clear. In 2003, 2004, if you look at the Nifty PE was just 12. During 2003, that is when the stock market really exactly started. That is an exact time to invest. If you look at the Nifty PE, it was 12 and earnings were 87. And consistently over in the by the time of the 2004, the earnings had gone to 90 and Nifty P's had gone to 19.96, which means the stock price also started rising. Blue one is PE and EPS is 90. The blue price started increasing. And from 2004, the stock price corrected, whereas the earnings started increasing. And slowly from the 2004 bottom, and by December and all, stock market started correcting like anything, meaning started improving. And by the end of 2005 6 and all, look at the earnings, it climbed to 170 just from 87. In span of 2 to 3 years, it doubled up. And stock markets rally justifies, right? Exactly. During the 2006 and all, market was around 16 17,000. And if you look at 2000, let's go 2007, this is the time stock market reached at its peak. And till even then, the P was 18.09 and Nifty is 207. It has increased. Just look at the peak. When Nifty was 27, I always said that about 23, stock market has reached Nifty P 23, stock market has reached its peak. Nifty P was 27 and the EPS at that time was triple two, 222. And from then on, because of the global crisis in US mortgage crisis, automatically the stock corrected. Look at the bottom. And from 27, it started climbing down. It went down, and it almost like it went down to 11. Just look at. And people who had invested at this timeline, November 2008, 2009, if you had money, you could have invested. Just look at the EPS. It started decreasing 210, And if you look at the EPS had consistently stayed in 210, 220, 230, 224. The EPS has never increased beyond a limit. And this is the timeline 2010. From 2007 to 2010, the earnings had decreased. And from then on, again 2011-12, earnings started decreasing, but still the stock market didn't move up beyond 19 or 20, and earnings had consistently reached, and I am at 2013, and earnings had reached 322, almost like 100 points from the peak of 2007. It took almost 6 years for the companies, the Nifty 50 companies, to reach 322, and Nifty PE started climbing. If you look at during 2013 only, we were about discussing about the next election. And if you look at July 2013, Nifty EPS has touched 337, and by December the Nifty EPS has touched 336. Earnings is the most critical factor. This is the reason. If you look at Nifty has touched that point, and Nifty PE has been around 18 till December. BJP was projected to form the government, and slowly the market started correcting. Market started improving, and by June 2014, the Nifty EPS also touched 370, and PE factor also touched close to 21. And this is the point, like market started climbing like anything, and aided by earnings. And Jan 2015, Nifty EPS was around 391, and from then on 391, just remember the value 391, and Nifty was around 22 again at its peak, and we touched around 28, 29,000, and slowly from then on the market was in between that place. And 2016 we had a brief drop in value, but look at the earnings, it stayed around 364. The Nifty earnings was around 364 even in 2016, and it was keep on going at the same pace. And I'm at 2017 April. Even at this point, Nifty EPS was around 394 for the last 3 years. From 2014 till 2017, Nifty EPS was around 394, and whereas the Nifty PE factor has started climbing 24, 25, and Nifty earnings 391. This is the peak of 2014 earnings. Just to remind you, 2014 Nifty EPS was around 391, and only at 2018 we touched back. The Nifty companies that touched back that's 391, and it started climbing in 2018, and that is the time period we had a demonetization effect, GST effect that started coming into companies, and briefly the some of the companies started improving, and slowly contraction started, and we had a consistent for the last 2 years. The Nifty was around 400, 400, 433, and 429, and we had a COVID drop, and before COVID we had touched a brief of 446. Nifty has touched a peak of 446, and from then on it started climbing down. We had a severe lockdown. Even during lockdown the Nifty earnings has not dropped, but after that the Nifty earnings started showing its effect. The Nifty earnings currently, if you look at, it's around 370, 370, 369. And what this clearly shows is that whereas the Nifty PE is around 33, it has briefly touched the bottom of 20.93, and even I think around 18, 19 it came down, and slowly it started climbing. And what it clearly shows is that the Nifty PE has started climbing like anything, meaning the stock price is slowly climbing, and it touched its Nifty as Sensex breached 43,000 points. Whereas the earnings are consistently the same. Consistently in the sense it didn't grow. It didn't grow from 2014 peak, even at 2020, it is same. And only when the earnings are reaching, price is increasing, but earnings are decreasing at the bottom. If the price is not is in similar sync with earnings, automatically the price should fall down because earnings is not increasing. And if you look at the next 2 years, India's GDP production is projection is going to come down in this financial year, and even for the next financial year, the rates are going to be lesser, maybe positive, but not going to be huge like 8% or 9%. If that is the case, earnings of the companies will surely fall because we had a lockdown. That effect is seen in the next 2 quarters, and people are not having money. Liquidity factor is a main criteria in India. If that is the scenario, what will happen to the growth rate? And if the growth rate falls, automatically the earnings are already started reflecting. The earnings in the last 6 years was almost same. If that is the case, the P alone cannot sustain. If the price earning ratio needs to sustain, the earnings needs to grow. the earnings are not growing, this will fall. That happened in 2008 by a huge margin. From the peak of 27 point PE, it came down to 11. Just look at what might happen now. And earnings for the next 2 years, for sure, for all the companies, for all most of the companies are going to fall because of various economic factors, which I have discussed already, and I will come up again in the next few videos. So if that is the case, what will happen if the Nifty falls? Are you ready to cope up? What happened to the earnings is that because of COVID, because of lockdown, and because of policies of the government and RBI, and they are already said that GDP is going to fall, and that if that is a condition, what will happen to the stock market? That is the main thing. If the company's earnings are falling, what will happen to the stock market? If the earnings are flat, and if the PE is alone high, which means the price of the stock is alone high, what might happen? If the fall happens, it will be much huger than what happened in March end last week. From 42,000 it came to 25,000 just because earnings were not justifiable. And if all the value investors are what they are saying across the world is that earnings are not justifiable, if that is the case, what you are going to do? Are you going to continue investment? Are you going to think that FOMO, fear of missing out on stock market rally, or are you going to stay out and watch and then take a step of investing at the right moment, not on the whole stock market, on particular stocks what you are tracking? Please share your comments and videos. If you like this video, please share it with your friends who wants to go and invest in stock market right now, but don't know what to do, and just following your friends, following some relatives, following SMS and email. Just follow this video because I'm showing the real data, and you can also verify this data. Thank you so much for watching. Please share your comments, and thank you for watching.